What's up, you guys? It's Greg. So let's talk about my thoughts on why there won't be a massive real estate correction and why right now isn't exactly the worst time to buy. I'm also going to give you my plan for the next 7-8 months in terms of real estate investing, because I am going to be going very heavy on real estate and crypto since I haven't really found any stocks that I like. But we're going to talk about the 30-year mortgage interest rate real quick. And this is playing a factor in prices staying high. So what I'm going to do is I'm going to bring up this. I'm going to bring up an inflation issue. I'm also going to bring up some more data from Redfin. Then I'm going to talk about rents, and these are all going to kind of tie in together on why I think there's not going to be a massive correction. There might be a slight correction because we are heading into the fall time, which typically you see slowing down. But I've looked at the data, and housing prices haven't started to drop yet. But here you can see in 2019 we have mortgage interest rates high. Same with 2020 as compared to the 2.88 that we have today. So that means that if you paid the exact same for a house today that you did in 2019 up here, it would be significantly cheaper to buy it today than it would have been in 2019. So that's part of the reason that housing prices are going up, because if you look at it from a monthly standpoint, people can afford to pay more because they're paying less in interest. So even though you're paying more for the house, you're not actually paying more, you're just paying less in interest. So that's part of the reason that houses have continued to go up, and with interest rates being low, it's going to be kind of hard for them to start coming down. The only people that this really hurts are cash buyers, because they don't get to take advantage of the low interest rates. And then at number 2, we're going to talk about inflation. So if you don't know a ton about inflation, I'm just going to read this real quick. This is the easiest way for me to explain it. Probably the best known inflation statistic in the CPI, the Consumer Price Index, which measures the monthly price changes of a static bracket of consumer goods as well as food and energy. So essentially, things start to cost more, meaning that the dollar goes not as far as it would have in the past. So that's typically what that means. I'm not going to pull up the CPI data because it's a ton and it's not relevant in this video, or it is relevant in this video, but it's too much for this video. So the current annual inflation for the 12 months ending August 2021 is 5.25. It's a little high. That's a little high, but we all knew it was going to be a little high. There's massive infrastructure bills and massive amounts of stimulus, massive amounts of money being pumped into the market. It's not exactly surprising that it's high. Everyone can act surprised that it's going to be high, but this is a reason contributing to prices in real estate going up, because the dollar is not going as far as it used to. And it's just as simple as that. Things are just going up in cost. I'm sure we all notice this with groceries and lumber and gas and literally everything. Everything is going up in price right now. It's just a side effect of inflation. That's just what happens. And then right here, so my hypothesis is, and I don't have a bunch of data, obviously I'm not some massive conglomerate, I'm just a dude on YouTube, is that we're seeing a lot of older millennials start to get into home buying. We've kind of now gotten out of that point to where they've had the ability to pay off their student debt. They kind of worked through the 2008 recession, because that was kind of the time they were either coming out of high school or coming out of college. So not exactly the best time to be looking for jobs. But right about now, they're able to kind of pay off their student debt, get their feet under them. They have a couple of kids. So they start to be looking for homes. And right here between 2020 and 2021, you can see the savings rate between $10,000 to $30,000 has gone up 6%. And then another 7% jump between $50,000 and $100,000. And I think that this has a lot to do with stimulus. If you think about it, you take a married older millennial couple, meaning 35, 36, 37, somewhere around in there. I think those are older millennials. And I guess I could say we, because everyone that watches this channel is a male between 27 and 35. So essentially my peers. So we are helping drive up the housing prices, which I think is funny. So if you look at it, if you have a married millennial couple and they have 2, 3, 4, 5 kids, they've got massive stimulus checks every single time. If they took that money and then paid down their student debt, or paid off their cars, or paid off their credit card debt, or just put it into savings, now they have the ability to start looking for houses and have money for that down payment, as opposed to before where they may not have had an extra $10,000 put down for a down payment. So I think that that's also driving a lot of people into the housing market. Also, with everything being locked down and not having the ability to go out and spend money, as well as, if you were living in an apartment and wanting a little bit more space, or having a smaller house and wanting more space with a bigger yard or whatever it would be, that's really causing an influx of buyers, because we're not actually seeing a lack of supply in the housing market. We'll see from the data that I'll actually turn to right now. So this is Redfin. So this is the Redfin data center. You can just Google Redfin data center. It'll pop right up. It should be the first one. So here we have new listings here. So 2021 is this orange one, and then 2019 and 2018 respectively, and then this red one's 2020. So here you can see kind of a taper off that we're seeing right now in September, which you can see is common and nothing to be worried about. So we're going to look at a couple other things, and this is why I think that we're not going to see a massive downturn. So here we have pending sales. They're still high. They're still up year over year. What's it say here? Year over year, 35%. What is it really? Oh my gosh, 30, 35, 36%. Absolute ridiculous. You can see kind of a taper starting off, but then you look at the new listings and you're like, well, there's not as many listings coming on, so it's not physically possible for as many homes to be being sold. But if you want to look at the new listing median price, so the houses that are coming onto the market, there was a slight dip. You can see here right there, they're floating right at 360 range, which is still parabolic movement from 2020 and 2019, like literally every other single year. But it's staying high. It's staying high, and people are still buying these houses. Here, touch 360 for the new listing median price. They did taper off. Like they tapered down to 350, but then it's actively spiking back up. So instead of prices kind of falling off, which you would see here, I mean, the prices did spike back up in September. So if we see it start to taper off, then it'll kind of follow the trajectory of everything that's going on. But if you look at the median sale price, it never tapered down. Even though houses were being listed less, the new median price was listed at 350, they were still selling for 359, 358. Like they were still selling over asking price, which again is still crazy. Just look at the difference. Like we can look at the curves on it and look at the curves on the graph, but just the fact that this is $80,000 more than we would be in 2019. I think that is crazy. So I think with all this being said, right now, just looking at this data and the inflation data, as well as the 30-year mortgage rate data that we looked at, I don't think there's going to be a massive correction, because in 2008 we had to deal with subprime mortgages, meaning that they were giving mortgages to people that couldn't qualify for that. That's not the case right now with people buying houses. You're seeing a lot of cash buyers, you're seeing a lot of investors, and they have stricter rules now than they did in the past. If you're getting a mortgage, you actually have to be able to afford it. So people are getting these 30-year mortgages that are super low interest rate and being able to afford them because they're paying almost nothing in interest. So as long as interest rates stay high and inflation keeps going up, we're not going to see a massive correction. So let's talk about rent for a second. I have personal experience on this. If you're new to the channel, I bought a foreclosure that we currently live in, and this will become a rental when we move. I own one rental property that currently has tenants in there, and then we're under contract for another one. So it's saying that rents are up 11.4% in 2021, and I think that's accurate because when we bought our first rental property at the beginning of 2020, I was like, or excuse me, at the beginning of 2021, we were like, I really want to get 1,600 out of it. We ended up listing it for 18 and getting multiple offers, and we had a signed lease in hours after listing it. We listed on like a Thursday or something random. So going back and looking, I have seen multiple other houses in the same area going for $1,900, $2,000, $2,100, $2,200. So they kind of took my house as a benchmark and bumped up the rent from there. So with inflation, natural appreciation, by buying these houses and getting them at a below market value deal, meaning that if real estate either stays the same or continues to go up, I'm making even more money by building an equity into that house. That's why I'm trying to be on this side, on the landlord side of rents going up, because if rents are going to continue to increase, let's say wages go up, due to inflation or just due to labor shortages, inflation keeps going up and mortgage rates stay low, I can buy more houses for cheaper and charge more for rent. So that's why I'm going back heavy into real estate, is so that I can take advantage of the natural appreciation as well as the increasing prices in rent, because eventually there's going to be that point where rents start to stagnate again, which we've seen in the past. And then when I go to buy a property, I can't bump the rents a ton. So those are my thoughts. With interest rates being low and the government just printing more money like there's no tomorrow, and our money's value just inflating away, I think real estate prices are here to stay. I don't think we're going to see a massive drop. So if you are considering getting real estate, me personally, keep in mind, I'm just a guy on YouTube. I'm buying real estate. I don't think it's the worst idea. Granted, I do always recommend to me and to my friends that you buy below market value deal, meaning that if you are going to buy a house that's probably $150,000. You try to pay after rehab, you know, you're into it for $95,000 or something like that. And that gives you a built-in wedge to create a little bit of equity in that property. But anyways, if you liked the video and you like this new lighting setup, make sure to hit that like button. That'd be really cool. Thanks for watching. Catch you next video.